Anytime there's a recession, there's always going to be career shifting. There's always going to be moving of jobs. There's always this concern of where will I be in the next 5 or 10 years? So for many people, this knowledge is not common, okay? We're not being taught this information. So what I'm going to do today is give you the breakdown, what's happening, looking at stocks, bonds, real estate, everything else. And then I'm going to tie that into the economy, of course, give you a summary, and then explain in full detail, looking at different potential career opportunities for you, maybe your kids, and so on. Let's begin. First things first, what Powell is doing is communicating that the evolution, this is Jerome Powell of the Federal Reserve, of course, the evolution of the economy is ambiguous, and how they may need to respond is equally uncertain. We've moved into a period where many of the Fed's models and equations have gone off the track. They are less visibility for that reason, and how the economy is going to evolve and so on. No, see, what's happening today is the economy itself is not what it once was, and we can make excuses for all of this, but when you have funny money being pumped into the system for so long, you know there's big concern. So individuals need to have this foresight and realize that maybe the job that I have now isn't going to be there in 5 years or 10 years. So what do I do? What can I look at? Or maybe my kid is about to decide where they are about to go in the coming years, and I don't think that profession is going to be good come, a few years from now. So these things are important to know, and we'll talk more about that today. Atlanta Fed President Bostic expects job losses, but says there's a really good chance to get to 2% inflation without killing the economy. That's right, they can do it. Don't worry, soft landing. You've heard this all before. So what's going on right now, very quickly, is that the Federal Reserve is increasing interest rates. We know that they are engaging in the quantitative tightening policy. We know that other central banks around the world are doing this. At the same time, we are watching a big economic shift taking place, and all of this means that we must be paying close attention, because what we had seen over the past couple of years is not what we have to deal with today, even from, let's say, financial crisis up until now. This is a very different world. Banks dust off lockdown plans to beat possible power blackouts in London. Plans include shifting to offsite locations and home working, energy crisis encouraging possible power shortages preparations. The world that we live in today is so very different than just a little while ago. It is frightening, to say the least. This is why we must be prepared on every level. I'm going to talk about the 2 pillars later on here. But understand, what we are facing here is not a simple matter of, all right, now I'm going to buy the dip. Okay, there's going to be about 6 months of turbulence, and then I'm just going to do this and that. It's so much deeper. Okay, so let's continue. Here we have it. John Paulson became a billionaire after his hedge fund effectively shorted more than $25 billion in mortgage securities at the dawn of the global financial crisis, and basically saying we do not have the same situation today. This is with real estate, okay? Saying, we saw what happened in 2008. This is not 2008, and I would have to agree. This isn't 2008. Okay, there are some elements of that, and there are some elements of 2087 and 29 and 70s and so on, but we have to understand that when you increase interest rates, you create a world in which you cannot have this nonsense take place, okay? Increasing interest rates is basically like tightening. It's they call it that for a reason, quantitative tightening, but it's almost like a constricting of all of that looseness, if you will, all of that wild gambling. All it takes is just a short period of time. Think about this. Beginning of the year, we were in a whole different world in terms of interest rates. And now look today. Okay, here we are looking at this. Currencies. The currencies are at play right now, and they are extremely volatile when you have the US dollar appreciating against its peers. In this case here, talking about Japan and China and its relation to the rest of the world. Look at this. The renminbi and the yen are big anchors, and their weakness risks destabilizing currencies to trade and investments in Asia. That's how big and important this is, okay? And it's been a while, to say the least, especially with Japan. We're already heading towards global financial crisis levels of stress in some aspects. Check this out. And the next step would be the Asian financial crisis if losses deepen. Now, for anybody who has read any books on the Asian financial crisis, it was quite significant. Hot money rolling in, really big ups and downs that were happening, and it was chaos, to say the least. So this affects people's lives. Real ordinary people that just trying to get by get squashed. So that's currencies, okay? What about this? Bonds. The great bond bubble is, quote, poof, gone. In worst year since 1949, bonds keep sliding in the face of aggressive central banks. Losses mount as the Fed vows to pull down inflation to 2%. Yes, that's right. Will they be able to? Not so sure about that. But anyway, this is basically just talking about what's going on with the UK. Remember, they tried so very hard to cut interest rates, and they, I should say, increase interest rates. They did it by 50 basis points. Market did not like that. Okay, and then right here is just showing us sour liquidity outlook. Measures of the ability to trade are already the worst since early 2020. Liquidity index is just showing us, and this has been moving up, okay? So this is coming at a time in which we were told everything's going to be a-okay, you don't have to worry, things are going to be just normal, and it's been nothing of the sort. We saw similar patterns right now, which I just don't understand why more don't talk about this, but September 17th, 2019, it began the repo crisis, and it's quite unbelievable to think about. They expanded their balance sheet more during not QE, so starting September 17th, 2019, up until the official beginning of quantitative easing in 2020. During that period of time, expanded the balance sheet more than they did in the previous official quantitative easings, 1, 2, and 3. And yet, still today, nobody acknowledges that. It's weird. Like, the vast majority of people just pretend that didn't even happen. All the while, we are being told that you don't have to worry because when the Fed actually prints, well, then that's going to save the day. Well, we know that really isn't the case. There's more nuance to that, much more nuance. Really quickly, looking at the total put volume at a record high right now. The amount of people putting bets on the market to fall is at a record high, showing us that there is obviously a lot of people looking in one direction. This is just comparing calls to puts. That red is, of course, the puts, and we could see green in general has come down. Okay, so less people betting on that. Why? Because they've been seeing the bearishness over the last little while. Usually, though, it is the exact opposite of what most people do. So when we hit records or near-term records, it usually means the exact opposite is going to happen. So it wouldn't surprise me to see the market bounce a little bit. Anyway, this is the VIX versus the move. So that's like volatility in stocks versus volatility in bonds. Despite the fact that both are kind of messed up right now, you're looking at the move index still moving higher. And the VIX index, that just doesn't move anywhere. We know how it works and the way that they are able to just suppress volatility in this particular indicator. Now I want to show you what you need to understand about the jobs market coming up. So stay tuned. First things first, what's happening? Well, I can tell you it's happening at an accelerated pace. What am I talking about here? Number one, when stocks fall, companies lay people off. In many cases, they replace their positions by giving the work to their coworkers or using robotics and automation. So I know of both of these cases here. Number one, where they give the coworkers, I've seen it myself. Working in a financial company, you look around, turn your back. Hey, wait a minute, what happened to Jimmy? Oh, Jimmy's fired. Hey, guess what? You get Jimmy's work now. That's it, problem solved. Productivity has been increased. And then you have robotics and automation. So I've seen it where they create the, quote, robo-advisors, and you look at that and they have to basically deal with, the clients are now dealing with the robots instead of the humans, and basically the same results in many cases because they're just all investing in the same things. It's important to watch the cycles and where you are in them. Okay, look at where you are, your age, your current career, all of that. You for your own self in your own geographical area. While you may not be invested directly in the markets, we're all exposed to some degree. Like I said, you might be working at a company and that's a publicly traded company. Well, if the stock goes down, guess what they do? You're getting the boot to the door. The days of going to university, college to get a degree just because most others are doing so doesn't have any value. Okay, so all my friends are going. I'm gonna go get that 4-year degree, but it's in, studying, I don't even know, the color of the grass on the moon in the year 2100. I mean, there's just weird things that I'm seeing. I can't even think of anything, but this is the kind of thing that people are just wasting time. Okay, we need to be serious about this. We need to be honest about this. What's going on? And then if we're not aware, we're going to be really hurt by this. Specific skills are required to do well. If you want to do well in these coming years, you need specific skills, okay? Not general skills. That's important. Okay, next thing, what will be relevant? So I'll give you a couple examples here. This is not an exhaustive list. It's just a bunch of things I wanted to put together. In the tech industry, anything to do with machine learning, okay? Cloud computing, artificial intelligence, programming, cyber security, okay? So all of these things here, very good stuff for a lot of people, and might not be of any interest to you, but I'm just trying to highlight where the market's turning, okay? So this is important, anything to do with this. A lot of these things like artificial intelligence and so on, really that's kind of a buzzword because this is more to do with programming. The skill of programming is extremely important, okay, when we're talking about the tech industry. Healthcare, we know that money is flowing into healthcare. It's not going to stop, whether that's pharmacists, anything to do with pharmaceuticals. Government loves to put money there. Nurses, of course, nurses. Healthcare practitioners of any kind, all right? And that's the kind of thing that, you just see more and more money just pouring in over time. We have physical skills, solar energy installer. The solar energy installers, while you may not agree with solar or what have you, governments are pumping money in. We should be aware of that. Aircraft technicians, that's another one. Construction managers, like I said, just a few examples. Healthcare practitioners shouldn't be in here. Electricians. So this is just a couple that I wanted to put together. The one thing though, and as I say here, anything related to smart technologies, all very important. By the way, I'll show you where to learn for free online. That's one thing. But I just wanted to tell you something, okay? If you are not making a considerable sum of money, okay, this is going to be hard times. That's the way it goes. So that's why I'm telling people right now that we need to have a lot of information around where we're going to take this. Where are we going to go from here? The idea that we can get by on an average salary is diminishing over time. Stuff is getting way too expensive. Inflation is simply off the charts. So I want to show you right now where you can learn for free online, just one particular resource, there are many, and then talk about the 2 pillars. Here's just one example. You can look online. There's been so many. I've done other videos about this. I had a short about it actually. This is called Skill Up. And you can learn all kinds of stuff that give you a certificate of completion. So that will be something that you can use. Maybe it's not a formal degree, but these days it seems like businesses care a lot less. If you have that skill, that's really what they're looking for. So this is just one place. As always, links are in the description. I hope you appreciate this information. If you did, you gotta subscribe to the channel. I got more content coming for you. Most people are unwilling to accept it, but this is the truth. See you soon.